Good day, and thanks everyone for joining today. My name is Cindy Gray, and I'm the newest addition to the leadership team here at Saturn Oil and Gas, having joined the company about 4 weeks ago as Vice President, Investor Relations. Before I get started on the presentation, I just wanted to take a moment and thank the organizers of the International Investment Forum for hosting this event. I'm excited for the opportunity to walk through our story today, as I believe some of you may be familiar with Saturn, while others are new to the name. Either way, I believe now is an ideal time to take a first look, or maybe take a closer look at the company's current position and future opportunities. As you may have seen, Saturn recently ranked number 4 on the Globe and Mail's fastest growing companies in Canada for 2024. And we ranked for the second year in a row, we were the fastest growing oil and gas company on their list. So I won't spend any time on this slide, given everyone understands its purpose. But if you do wish to read more about forward-looking statements or risks, please check out the presentation on our website, and you can read more on Saturn's risk. So as I mentioned, I'm very proud to be able to share the Saturn story with you today, as I believe the company truly stands out relative to other E&P companies in the sector, as I'll talk through in this presentation. Saturn's is executing a straightforward and well-defined strategy to consolidate a critical mass in mid-life cycle assets throughout the basin, and to do so at a discount. Not only do these types of assets give us stability and predictability, but they also feature infrastructure that is already built out, leading to full cycle costs that are nearly identical to half cycle. As a rapidly growing company in the public E&P space, Saturn continues to gain an appreciation from market participants, which should only expand with continued execution, validating our strategy and value creation potential. Looking at our fundamentals, the table on the left here shows our current enterprise value of just over 1.3 billion Canadian. And I would point out that our shares outstanding continue to decline with our normal course issuer bid, or NCIB, which reflects a return of capital program that was initiated in August. From a financial flexibility and liquidity perspective, Saturn is sitting today with approximately 120 million of cash on our balance sheet, plus a fully undrawn $150 million credit facility. Operationally, following closing of the most recent Battram and Flat Lake acquisition, we forecast production in the 38,000 to 40,000 BOE per day, comprised of approximately 86% liquids, which is light and medium crude oil and NGLs. I think a clear indicator of the strength of our strategy can be seen in the graph, the EBITDA chart on the right-hand side, which outlines that we've generated nearly $400 million in adjusted EBITDA over the past 4 quarters, which excludes Q3 2024, and that will be released in early November. Saturn's focus is on free funds flow generation, which is a critical component in generating value. And the Saturn story is one of incredible growth over the past 4 years. This growth showcases the step change in size, scale, and financial performance the company has delivered. Our team is comprised of experienced industry professionals with deep Saskatchewan roots that translate into a high degree of familiarity with the regional assets, aided by the fact that our team has been involved with the drilling of over 1,300 wells in Western Canada. Complementing the production growth shown here are some key financial metrics for the next 12 months, including our adjusted EBITDA, free funds flow per share, plus you can see one of the highest free funds flow yields among our peers. Saturn has established a proven track record of successfully completing transformative acquisitions, targeting assets that offer visibility towards harvesting free cash flow from a long life inventory. This strategy is designed to support meaningful growth in cash flow per share. As the maps on this slide show, we have done 4 significant transactions, assembling an oil-weighted portfolio that positions us to continue generating cash flow and free cash flow. Our most recent accretive transaction closed in June of this year, further building on our core Saskatchewan asset base with the addition of the Battram and Flat Lake assets. Saturn brings proven operational aptitude and the ability to enhance the performance of our assets. With each of the packages that we've acquired, we've subsequently demonstrated improving efficiencies and costs, supporting the thesis that certain assets can perform better within Saturn's portfolio. We embrace the adoption of new technology and innovation to streamline our operations and reduce costs. For example, by deploying sensors and monitors at well sites, we can save on both labor costs as well as reducing risks. We have focused on operating cost reductions, and prior to the Battrum Flat Lake acquisition, brought OPEX to just over $18 a BOE in Q2, meeting our goal of coming in under $20 a BOE. As a result of integrating the new assets, we'll probably see OPEX come back up a bit, but the bigger we get, the more efficient we can be, and we'll again focus on bringing the average back down, targeting under $20 per BOE. Further, with greater size and scale, we have multiple rigs running and can get better pricing on services and have higher infrastructure utilization. Saturn's royalty structure averages in the 12% range, as you can see here, and the combination of reducing OPEX plus attractive royalty rates are expected to provide the company with a competitive advantage, whether through organic or transactional expansion. As part of our blueprint for successful acquisitions, we focus on prudent and rapid debt repayment, which you can see demonstrated here in the graph. We have a track record of quickly reducing net debt following transactions. By growing production and reserves, we similarly expand cash flow and free cash flow, supporting that ability to reduce the net debt. We intend to replicate this strategy again with approximately 50% of free cash flow earmarked for debt reduction, and our goal being to bring net debt to adjusted funds flow down to under 1 times. The outcome of our efforts to grow cash flow has resulted in Saturn being positioned as a leading light oil and low decline producer. Because of our lower declines, our need to replace barrels each year to keep production flat is mitigated, resulting in lower capital expenditure requirements, which enhances financial flexibility by supporting the free cash flow generation. We are the 4th largest producer in Saskatchewan, with a reserves and production base that is 86% liquids, a factor that also supports strong netbacks. Saturn's more than 2,100 identified net locations translates into over 20 years of development inventory, with about 80% of that inventory being Tier 1 and 2 locations, assuming a $75 WTI. Another beneficial characteristic of the company's asset base is our ability to be nimble and to move quickly in response to changing commodity prices. In comparison, companies who are operating perhaps in resource plays such as the Montney up north, those sites require large pad drilling, which can sometimes take months to bring on volumes, whereas we can bring on volumes in weeks. This advantage positions us favorably in terms of responding and being nimble and reactionary when it comes to changing commodity prices. You can see on this map the culmination of our asset portfolio assembly to date. Today, we have 3 core areas, with Southeast Saskatchewan representing our largest producing area, offering high rates of return. The Battrum Flat Lake acquisition we closed in June increased our Southeast Saskatchewan production by more than 70% and provides new development opportunities, including drilling open-hole multilateral wells that we have seen perform above type curve, along with pre-pressurized Bakken development opportunities at Flat Lake. The Battrum acquisition bolstered our West Saskatchewan area and added to our existing stronghold in the Viking, where we continue to drill top-performing wells. West Saskatchewan features multi-zone light oil development, where ongoing well outperformance drives steady production and cash flow generation. The Viking provides deep and repeatable inventory of more than 200 de-risked locations with strategic facilities that offer blending upside. This is an area we see extensive future potential consolidation opportunities. In central Alberta, the Cardium resource play represents a well-defined light oil fairway, providing Saturn with predictable reservoir characteristics and long-term stable production. Earlier in 2024, we drilled 4 of our best extended reach horizontal wells in the Brazeau area. And then we added to that footprint recently with a small tuck-in acquisition that helped fill in the Brazeau acreage, plus added some current production with incremental drilling locations. With respect to our Kaybob Montney drills in Q3, we expect to provide an operational update in our Q3 24 release. I know there's a lot of information going on this slide, but ultimately there's one key takeaway that I'd like to leave you with. In the areas where we are seeing the strongest type curve outperformance, including Southeast Saskatchewan and West Saskatchewan Viking, we also have sizable future drilling inventories. That positions Saturn for ongoing production adds with attractive capital efficiencies. In this graph, the gray bars are showcasing the initial production rates that Saturn realized from new wells across our portfolio in 2023, which in aggregate averaged 12% higher than the modeled type curve. The figures above each bar show the number of wells we drilled in 2023 in that area, while the yellow text within the bars denotes the per flowing barrel capital efficiencies. As you can see here, Saturn continues to efficiently add volumes while consistently outperforming type curve expectations. Into 2024, we're seeing this trend continue, with year-to-date being one of the best periods we've seen from an outperformance of type curve perspective. This is highlighted by results from Southeast Saskatchewan and Central Alberta Cardium here on this graph, both of which exceeded the type curve outperformance we achieved in 2023, along with realizing further improvements in our capital efficiencies. The reserves figures shown on this slide are based on year-end 2023 pro forma, the Battrum and Flat Lake acquisition. We plan to release and file our updated year-end 2024 reserves in the first quarter of 2025. However, there's a few key points on this slide to highlight. First, Saturn's ability to efficiently and profitably add reserves is demonstrated by our 3-year finding, development, and acquisition, or FD&A, metrics, which have driven a 3-year average recycle ratio of over 3.5 times, meaning for every dollar invested, more than 3.5 can be generated. In addition, taking a look at Saturn's net asset value and NAV per share on a pro forma 2023 reserves and post-acquisition financial metrics, it appears there's a potential opportunity for a re-rate. On a proved developed producing basis, our NAV per basic share is estimated at over $7, nearly 3 times where Saturn's currently trading. The total proved and proved plus probable NAV per share estimates are even higher, indicating there can often be a disconnect between the market valuation and underlying fundamentals. Saturn is focused on enhancing our per share metrics to help try and close that gap. Our previously disclosed guidance for the next 12 months offer a solid picture into our priorities around capital allocation. We haven't yet released 2025 full year budgets, which is expected before the end of this year, but based on the assumptions that you can see cited here, the free cash flow yield, you can see what the free cash flow yield looks like and how that is expected to underpin net debt reduction, shareholder returns, and funding strategic tuck-in acquisitions. As mentioned, we are committed to improving per share metrics and are currently using the NCIB as a lever that we can pull to help affect that. Saturn continues to max out our daily purchase limits that are imposed by the TSX, which is around 46,000 shares per day. We believe buying back shares provides us with the most cost-effective barrels we can buy to extend longevity without drilling up our acreage. The graphs at the top of this slide provide a glimpse into how Saturn stacks up against peers, as outlined in reports from 2 different investment dealers. To date, in 2024, we have been picked up by 3 additional analysts who now cover Saturn, and you can see our full coverage list outlined here. Even though Saturn has significant institutional ownership in our stock, including 2 well-known and long-term US-based institutions, we intend to further build out our capital markets relationships going forward, along with exploring new opportunities to engage with the investment community and reach new potential investors. I'll close today's presentation by summarizing a few of Saturn's key investment highlights. The company has assembled a low-decline, oil-weighted asset base in established basins and done so at attractive metrics. With technology adoption and new ways of approaching development, we have shown repeated outperformance and been able to lower costs, which we intend to replicate across our portfolio. Our focus on generating increasing cash flow and free cash flow supports rapid debt repayment, along with underpinning our return of capital initiatives, while an active hedging and risk management program help to protect the downside. Saturn's deep Saskatchewan roots, combined with our unique strategy and management's ability to improve asset performance in the portfolio, are factors that set the company apart, while a potential disconnect between relative valuation and our underlying fundamentals represents an opportunity. I want to remind our viewers today that we will be releasing our Q3 results on November the 5th after market, and we'll host a conference call the morning of November 6th, details for which will be outlined in the coming weeks. Thank you again for taking the time to join me today for the presentation. Apologies for some of the issues advancing slides, but I hope my presentation has inspired you to take another look or a closer look at Saturn.
Excellent. Thank you very much. So there's already one question in the chat. So Given the clear undervaluation of Saturn versus the peers, would the company consider pulling back on CapEx and boosting buybacks or adding SIB? Seems the market does not care at the momentum and with $70 oil, it does not seem too useful to drill and increase production volumes.
Well, I would say that in order to generate that cash flow, that we would need to either do an SIB or continue with the share buybacks. We need to generate that cash flow, and that requires production. And it does, certainly in a $70 oil environment, we would be cautious and prudent and take a look at capital spending. And management is constantly evaluating commodity prices, CapEx, coverage for the share buyback, as well as debt repayment. So all of those levers and all of those components are being evaluated. And certainly an SIB is something that has been brought up, something that the management would take a look at if it made sense. But for now, really focusing on that NCIB coupled with reducing costs, increasing netbacks, and generating cash flow are priorities.
Okay. And have any additional hedging strategies been implemented since July?
You will see in the Q3 report that we have been active on the hedging front. We did have some legacy hedges that were definitely punitive, I would say. And so those we have looked to clean up, if you will, and also layer in some hedges on an opportunistic basis when we've seen prices increase. So giving ourselves, I think, a more attractive hedge book going forward, given our view that commodity prices will be kind of 60, 70 to 90. So looking to layer in collars. And again, you will see that all outlined in the Q3 results.
And how's the integration of the newly acquired assets progressing?
Excellent. The team is very efficient. We're seeing good strides, good streamlined operations. And again, as I mentioned, we do expect to see, because they did have higher OPEX coming in, we expect to see maybe a tick up in our OPEX, but the focus will be to bring that down, deploying Saturn strategy for streamlining costs, increasing efficiencies, using technology where possible, all of which we believe will help reduce those costs.
And has the extensive Q3 drilling program met your expectations so far?
I think you can expect to see, as we've outlined here, outperformance has been kind of the word of this year in terms of how things are going. As I talked about, we drilled our 4 best wells in the Brazeau area earlier this year, and we continue to see solid outperformance of type curve across our areas. So we're looking forward to the Q3 results, which we will include an operational update in that.
Yeah, again on that, how does the actual well performance compare to the type curve projections?
Well, in terms of, I can only speak to kind of what's out in the market, but as you saw last year, we were 12% above type curve. We're exceeding type curve thus far this year. So we anticipate a continuation of that strong operational outperformance.
And what's the current production level in barrels of oil equivalent per day?
Yeah, we would be in that, approaching the 40,000 BOE per day. We had the 38 to 40,000 target for next 12 months. So we would be definitely in that range, I think, currently towards the upper end of that range.
And at what oil price, US dollar per barrel, WTI, would you consider revising your current drilling plans?
Yeah, I think if we see WTI get down to the $65 a barrel range, then we're likely to take a look at CapEx, take a look at capital allocation, and figure out, a more prudent path forward. Currently, we're keeping things status quo. Again, we'll monitor very closely, and in our Q3, anticipate having a bit more outlook for the balance of the year.
And are there any plans for future acquisitions, and what criteria or strategy will guide these decisions?
Certainly. And as our capital allocation sort of waterfall chart illustrated, what we want to do is really, see if we can find tuck-in acquisitions like we did in the Brazeau area, which gives us the opportunity to really expand and capture synergies in areas where we are having that strong outperformance. As a public company and given Saturn's positives of growth through transactional acquisitions, it's certainly possible, but at this point, we are focused on more of those tuck-in acquisitions.
Okay. So currently, those were the questions from the chat. So addressing the audience here. Oh, another one just came in. What should investors view as catalyst to close the valuation gap with peers outside of just being cheap? Hard to get investors excited here. From conversations with other investors, only the deep value guys have interest.
Yeah, I think, continuing to tell the story and really articulate to the market all of the positive elements that Saturn has achieved, both from an individual, well type curve perspective, but also just the overall portfolio approach that the company takes to streamlining operations, doing things differently. I think that by embracing and really engaging with the markets, attracting new investors, getting out there to different pockets and pools of capital, that is going to help, combined with just demonstrating that ongoing walking the talk, meeting guidance, meeting or exceeding guidance, and really setting out a track record that showcases Saturn doing what they say they're going to do and generating that positive cash flow.
And the company has now 500 million market cap. How does it attract more institutional investors?
Well, I think we have a couple of advantages. The two cornerstone, large US investors, GMT and Libra, that are in our story. The fact that they have chosen to back Saturn and to get involved with Saturn really is a sign of a positive development. So people look at Saturn and they see that kind of capital structure, they see that kind of shareholder base, and that really speaks volumes. And I think in addition to that, with our recently completed bond offering, we have a whole host of new bond investors who also have, potential equity arms. And so we're having conversations with new investors that we previously perhaps, would not have been able to get in front of, but are now taking a look at Saturn and seeing the valuation and seeing the opportunity that we present.
And how do you foresee this affecting the shareholder structure in the long term?
I'm not sure what you mean.
So will you focus more on institutional investors, get big players invested in Saturn, or because currently I think there are a lot of smaller individuals invested in Saturn. So what do you expect for the shareholder structure?
Well, we absolutely respect and honor and want to attract shareholders of all sizes. So we certainly are not at the exclusion of individual investors focused on larger investors. Our priority is attracting new eyeballs to the story, is getting people interested, whether that is individuals that are buying through their self-directed account or whether those are larger institutions. For us, the focus is on executing on our strategy, making sure we tell that story, we set out the outlook and the guidelines, and then we remind the market of how we have performed, how we have done exactly what we said we were going to do. And that ultimately is typically a recipe for success.
And what feedback are you receiving from institutional investors regarding investing in oil, particularly in the context of ESG considerations?
Yeah, that's an interesting one here in Canada, or in North America in particular, just given the Canadian government recently suggested some competition, regulations that would limit or target what they're calling greenwashing, which has really impacted the Canadian landscape in terms of talking about the good work that's being done on environmental initiatives, on emissions reductions, just because there is so much uncertainty about what the fallout from that potential legislation might look like. That doesn't mean that we have stopped, or any of the industry has stopped focusing on ESG. We're committed to reducing the footprint. We're committed to reducing emissions and operating as efficiently and streamlined as possible.
And are there any plans to expand into the US market to increase visibility and attract more attention to the company?
Well, we do have the OTCQX listing, and I certainly think that pockets of capital in the US may not have been familiar with Saturn with the rapid growth that we've experienced. I think we kind of came out of nowhere, if you will. And so I think there's an opportunity for us to identify pools of capital where Saturn is a relative unknown, and we have the opportunity to introduce our story at a time when, we see a lot of potential upside.
And insider buying is often seen as a strong signal, especially in the oil and gas sector. Do insiders have plans to purchase stock in the open market after the blackout period?
Yeah, I mean, it's definitely something that I believe each individual here has the majority of each of the management team, majority of their net worth tied up in Saturn. As a new incumbent, I certainly plan to be active in the marketplace once we are out of a blackout period. And again, reminding the audience that it is very challenging with an active company, just because you're almost constantly looking at things, working towards things. So there are few windows often that you can get active in the market, but I certainly believe that our history and what we've seen to date is a good indicator of what's to come.
Excellent. So looking at the time, just one last question. Could you, or is the company currently developing a dividend strategy, or are there plans to implement one in the near future?
I think for the near future, we are focused on the NCIB, on improving our per share metrics. If we were to see the stock run and significant free cash flow improvement, then certainly a dividend strategy is not off the table. But at this point, given where commodity prices are, where Saturn's operations are, and kind of our strategy for the near term, our focus is on that, reducing the shares outstanding and increasing our per share metrics.
Excellent. So the time is up. Cindy, thank you very much.
Thank you very much, and I hope you have a great rest of the day.